41% of the S&P releases earnings this week. We can already see the action. We should probably talk about the key levels before we get into some of these bloodbath and double-digit returns after hours. We're going to focus on the micro and what's going on and just go from there. But I do want to start with the beginning of the day and just kind of look at what we see happening. Let's mark off the open. Now, I think this is important so people understand what's really going on out there right now. And I don't expect a lot of macro moves, even with the economic data coming out. I think you have to look for these micro moves or earnings moves and watch how they're positioning themselves this week. So this is Sunday night, and you can see that's the 1 minute bar right here. And then that set the stage, that opening Sunday bar. That became the low, the retest, and then we went from there. This is the open. Up, down, and that was it. The difference between these is roughly 25 basis points. That's all we did today. Between the election and the earnings, I think it's going to be pretty light. So we're going to focus on what I would refer to as the micro stuff. But let's talk about this on the NQ too, so just so you can get an understanding of where we're at. We start the day off with a bang, and you can just see this pop, and then everyone's getting excited, and then 9:30 just kicks in, and then it was just straight down. There was really nothing more to say or do. It was just straight down, never came back from that on the NQ. Never rallied, tried, and then it was just straight selling all day long. I do see some positioning going out there, and I do see some positioning moves that we'll talk about. But if we're to look at this in just this range, it's really very similar to what we saw before. You take this low right here, come straight across to Sunday's level, and that was pretty much it. Now, this did fare worse, but it is higher beta, and you're going to get that. Now, after hours, you have some that are up significantly and some that are down. But this is a great time to see what is moving and how to take advantage of it. Now, what we're always looking for now are micro moves, meaning the differentiation between where things closed, where they opened, and how they acted during the day. So the first hour of the day, we can just see retail just puking meta. And then for the rest of the day, we just see institutions buying, and then you have the traders that just clear it out at the end of the day, no big deal. But this is very different behavior than what the market did, and I think that's important to note. So this bucked the market. Another one that bucked the market today that we should talk about is AMD, and you can just see it opened up and went straight. Now, take a look at this. This is NVIDIA today, and look at the difference between how this acted, how NVIDIA acted, and how AMD acted. And again, we're going to be really micro tonight. We're going to go over some more oscillators and indicators in a second, but I think that this is really important for us to get. They opened up and they could not get out of NVIDIA fast enough. They went out of tech, but they did not want out of AMD. They want to be in it ahead of the quarter. And I think that's really interesting. And the exact opposite, what you saw with Meta, 3:30 on, they could not get in fast enough. And you see that $1.50 pop in the last half hour. You could argue that that's people being short and they want to cover, especially some of the earnings that went out tonight. They wanted to get ahead of it. But I think we need to focus on this. And what is this actually telling us? I think it's telling us that people want to get into this for the quarter. And again, we're going to be really on earnings this week because we have so many coming out. And frankly, everything's about earnings. You do have GDP this week. You do have PCE, non-farm payrolls. But frankly, with 41% of the S&P and the election, all the economic data this week could mean nothing depending upon how it goes in the White House next week. It can change that fast based upon policy. So I do think it's worth watching. I don't think it's going to carry the same weight as earnings. So if we just take a look at AMD on this quarter and take a look at AMD on this quarter, and then we take a look at what's going on right here, we can see that we haven't gone anywhere in 3 quarters. So if this is remotely decent, you have backed all these earnings into it, and then we should see some kind of rally. And I think that that's what they're leaning towards. And if we take a look here, we can see when the date is that they're coming out, which will be tomorrow night. And you can see that they're looking for 6.71, 92 cents. But look at what's happening around that 55. And for those that don't know, I use a 12, a 22, and a 55. I'm getting institutional support coming right into this. Institutional support coming right in to that call. So I find that fascinating, and it's a little different than some of these other names, and I think that's important. You've had it on Meta. Meta broke down, and since then is trying to rally, and you do have some buyers out there. And even some names out here where I thought you would see some love, and you're seeing the exact opposite. And I wonder if this is just a harbinger of things to come. I do like trying to see how they position themselves ahead of it. Now, sometimes it means nothing, but other times it's pretty telling. So I do look at it. The rejections that I'm getting here after this pop, after this rally, and again, this rally was about T5 out, right? Tomorrow night. So you're 1, 2, 3, 4, 5, and then tomorrow's go time. So you're pretty much that 5-day out bar where people will start buying for these kinds of trades into earnings. It's usually T plus 5. So the transaction date, which is tomorrow, then you go 1, 2, 3, 4, 5 T. So if I look at this, I'm kind of curious why you rejected. And again, I had a position in this. I did a day trade on it, pulled some money out, and then just left it on, and then just got stopped out of the rest of it. But this was troubling. This was definitely something that, like, okay, is this really the time that we should be selling off this early? And yes, we have sold off before on these calls, and there are times when you're rallying into them, and there are times when you're in free fall. But it's weird to see the selling when you're above the 55. Like, if you're below the 55, you kind of see that before earnings, right? You can kind of get that. Even this one we lifted, but historically, if here's earnings and you see how we moved, we usually are trading up into it if we're above the 55, right? So you're above the 55 and you're trading up into it. But again, if you're below it, not so much, right? So I think that there's something here, and I don't know, I could be reading into it a little bit too much. I'm always interested in your comments on this. I do think they are positioning to be in AMD. I do think they are positioning to be in Meta ahead of the quarters, and that's tomorrow night along with Microsoft. Tomorrow night's going to be absolutely wild. And I think your days in and of itself, besides earnings, are going to be a little quiet. I think that's why some things sold off today that we're going to get into right now. Now, there's some things here we're going to have to talk about as adults without getting into the political side of this, so please keep the political commentary out of this. But I do want to show a chart and how this is linked and what's happening with Bitcoin and how I think that this has happened. So it's very clear that if one gentleman gets in versus the lady that gets in, that we're going to see the Bitcoin move higher because it's an inflationary hedge. I would be remiss if I would not point out that this is breaking out this evening. It is very clear that this was a test, broke, and this is a retest, and it's happening this evening, and you can see this happening right now. The target for this would be up here. Now, it is estimated that tariffs by Trump are going to lead to massive inflation and that this is an inflationary hedge. Candidly, both candidates would lead to inflation either way if they are able to go through with what they're saying. That is what these parties are telling one another that is going to happen, is what the bureaus are stating. I am not stating that. I want to be really clear about that. But I would be remiss if we do not point this out before I go any further and cover what I really want to dive into. And also, they're going to buy the MicroStrategies as a hedge. You could look at the BITI, right, as if you want to take the other side of that, BITO. Okay, you can look at this stuff you want. The way that I always just look at it is just buy the Bitcoin. It's just easier. And candidly, for me, I've just had a position in MSTR. At the time of recording this, we also have calls in MSTR. And I do think that this is going a lot and setting up to go a lot higher. People will argue the price point. It's not because of what they have and the cost. It's because what they can do and how people use this to hedge. I've done a whole video on this, and I can go over it again on Saturday. But the reason that this goes up is because Bitcoin goes up. And it goes up higher than them because they use this as the hedge against Bitcoin. And you need to understand that aspect of it. But we're not going to get into that tonight. But I'd be remiss if I don't go over this and think that, just be blunt and say, I think this is going a lot higher. I think this is going a lot higher. And it would not surprise me to see this thing at 100,000 right now. I don't think it's going to happen this week, but I think this goes a lot higher. And I think people are going to start using this as a hedge for everything versus fiat currency to inflation, but everything. I think that this is going to get a lot more traction than we think. And I was kind of down on it when we got into the iShares and BlackRock got a hold of it. I still am from that standpoint. I'm not crazy about that. But I would be remiss to think that this doesn't have the opportunity to get to that 100K kind of level and grind higher. I think obviously the multiple returns are over, but you need to watch this. I also think that you should be looking at these other ones out there as well because they are trading along with it. And they are grinding higher. So I do think that I'd be, remiss if we're not looking at these others, but they don't really seem to be participating the same way. So, stick with the horse that brought you there. And I think that makes the most sense. And again, I don't do a lot of crypto, talk about a lot on purpose, but if you were to look and say, okay, well, which one's setting up? This Solana's setting up. It just is. And I want to go over this. Now, I don't know why. I'll get a ton of comments on this. And let me be very clear. I don't care. So you don't have to put comments in about it. But this one is clearly setting up to break out, okay? And I would watch this. If one of these other ones is following the same pattern as Bitcoin, if I could point out which one it is very clear that this has a very similar pattern to what's going on in Bitcoin versus any others that are out there right now. And I think that's really important to get. Now, again, very similar pattern. And it is what it is. But I would be leaning towards this one and then hedging it through MicroStrategies or just long MicroStrategies, which seems to make the most sense. But let's get into earnings. Now, just so I was clear about this is the DNC convention. This is Trump's odds of winning through PredictIt. And this is what's happening to 30-year yields. Apologies, it's been a long day. And why am I pointing this out? because that is the inflation trade that you're saying. So what we have to understand is if he does not get in, yields are going to rally and the market's going to sell off. It's not conjecture, because that's the trade that they're putting on right now. So they will unwind that trade. It has nothing to do with Harris. It has to do with the fact that the trade right now is the quote Trump trade, and they are selling off the yields because of that, and they are buying the equity market because he's going to inflate assets. That's why. And we did see JP Morgan today come out and highlight 5 areas of interest that they are telling their clients to look at right now. The Magnificent Seven going into earnings, crypto exposure, meme stocks of all things they were talking about, AI, telecom and media, anything there, and China exposure. This is where they're telling people to focus, and also the value names. But I thought it was really interesting because they're just saying, just buy meme names. And then we saw that some of those names moved today a little bit, didn't we? The crypto exposure, I think that's a little bit harder to do. I think you do that through Block or some of the others, Magnificent Seven, and I have put out that AI powerless name at nauseum, but I could always put it out again. Should you want to see it, just comment on it. Now, this is the best quality that I could get these graphs. So I'm going to go through them, but I think it's really important for us to go through this. And so you understand what we're looking at going into earnings. This is the Magnificent Seven. And what you're going to see here are the PEs on the side, and this says PE, and it tells you right now that the PE of the Mag 7 on average is at 30. And then what it's going to do is tell you where the high is, and the high has been 44 right here, and that was in September 2020, and then it tells you the low has been 19, and that was in 2018, and the average is 29. So the blue line is telling you where the average is. So what we're seeing going into earnings here is, are we seeing the PE above or below where it normally is? And you're seeing it average. This is important when we start going through these names, and I'll explain why. And again, I'm not going to have time to edit this, but I want to get this out because I'll tell you what this tells you. When you look at like the blue being the average, okay, and then you look at where you're at right now, and you see that you're at an extended range over the average PE on where you've been, you're at more risk if you miss. So if I looked at Apple right now, Apple is at more risk. And I think this is really important because when people are looking at these questions, so I'll tell you why I'm doing this. Saturday, everybody really liked that video where I explained why you want to be in the names that you like before earnings if you've done your fundamental research. One of the key metrics that I would look at is historically, is the stock expensive or cheap right now? Because that tells me how much the name has to beat expectations by or meet expectation. And this is what you're saying. So when you look at Apple, we would say Apple has a lot of work to do. If we continue down this line and look at some of the others, like this is NVIDIA, and NVIDIA, you can see it right here. You would see that NVIDIA's average right here is 37, and we're actually below average, and we were just at a 1 standard deviation below that level. So that was actually at a discount. So NVIDIA is actually cheaper on average right now than something like Apple. Once again, I apologize for the quality, but it is what it is. If I want to get this stuff out, I have to be able to try to figure out a way to get it to you guys. So, but this is Microsoft, the PE right now. It shows you where the average PE is, and you would look at the blue line, and you would see you're at that 1 standard deviation. And what is this telling you? It's telling you that you're not cheap right now on Microsoft, and this could be one of the reasons why people were selling it down. Now, Google has a lot of weight over it, but if we look at Google, historically, PE, we're cheap right now. So what this would tell you is that if Google did not do well, historically, it doesn't really have that far to drop. Matter of fact, if it was to go much lower, you'd be at the lowest levels you've ever been since 22. So that's something to think about. They really don't have to do a lot because you're sitting right around that 18 PE right now. And I want to be real clear about this, guys. Do I trade PE? No. But it does tell me, historically, unless they have a bomb of a quarter, that you're probably safe. So like if we look at something like Amazon right now, which does have a higher PE, but historically speaking, from 20 on, this is the lowest level PE that you've had. So if this is not a disaster, and you were to go back to something like average, you would look at Amazon and go, okay, if it's not a disaster, then you're probably going to live, right? Because you're going to have the value guys go out there historically, and what they're going to do is they're going to look at the Mag 7 historically and go find out which one is closest to the standard deviation line, right? You'd go look at Mag 7 and go, okay, well, this could get back to that standard deviation, therefore this could go higher. I hope that makes sense. Whereas when we look at something like Meta's at that second standard deviation line versus the mean right here. So Meta better crush, right? Even though the PE is lower than Amazon, historically speaking, we're in the nosebleed. So we need to crush. Now, it can crush, But understand that if Meta misses, that this is something that you would look at and say to yourself, okay, well, this is going to be really ugly if Meta misses. And then what you would do is maybe you might not do stock, you might do options into the call, something like that. A great example of this would just be Tesla. Whereas people say, well, the PE is ridiculous. Everything's ridiculous. But the PE is ridiculous, but it's a standard deviation. So when it came out and beat, it wasn't like it was up here at those first or second standard deviations off of that PE, even though the PE is high. It was right in line with the mean. Therefore, when it exceeded expectations, it had room to expand. It's a really important concept to get. Don't look at the numbers. And this is really how JP Morgan's telling their clientele to look at it, the institutional side, because what they're saying is, well, you're not expensive historically speaking. And you could argue, well, that's ridiculous. Well, whatever. But this is how they view the world. And I think that it's important to understand that. That followed up with us talking about this earlier, which let you know that they are leaning their clientele towards these names going into that. And now you'll understand when those names move, why they're going to move the way they are. For example, if you saw an Amazon not do well, but then you're like, well, it's not really dropping, you would understand why, historically speaking, because the PE is at a depressed level. And you'd be like, and you could go, oh, okay. And then if Meta crushed, but Meta didn't go like really significantly higher, you would understand why, right? And this will allow you to look at these and understand, like, hey, when that news hits, how should these names be affected? It doesn't mean that Meta can't crush and go higher. I want to be really clear about that. It can. It can also grow into that valuation. So let's say Meta beats, and then everybody has to raise their earnings guidance, and then the PE moves with it. Meta can go higher. But what it does tell you is it does give you somewhat of an understanding of where they're at. So you would look at something like Amazon and say, you know what, the bar is pretty low for Amazon here, right? Whereas you would look at something like Meta and say the bar is pretty high for something like Meta here. But that doesn't mean that Amazon makes its low bar, and it doesn't mean that Meta makes its high bar. It just means that you understand where the height of the bar is. I hope that makes sense. If it doesn't, please comment below, and I'm more than happy to go over it. Please watch the end of the market tomorrow. You really want to focus on things like how these markets are acting with these names ahead of it. You want to look at the conference calls. We're going to be covering a lot of these names tomorrow night. But again, I focused really hard on what I saw happening at the end of today, and it was very clear what names they were going near and what names they were playing. Now, let's get into the fun stuff. VFC, 45 million shares short, and you're seeing this at 20.72. And disclosure, I have a position in this, beat by 58%. This is the beauty and the fun of earnings. When something like this happens, okay, everybody is short, 6.5 days to cover, and you're coming into a company that beat expectations and raised guidance, all right? So this will be one tomorrow that's probably going to panic shorts. People are not going to understand why it's up, and you'll be like, oh, I watched this guy's Arete trading channel. Now I know why that's going up. TMDX was basically a dumpster fire floating down the river with a bunch of raccoons. There's really no other way to say it. It was a disaster. Now you gap filled and you're trading up because you sold down so much. Can it bounce? Yeah, weirder things have happened, but this was really ugly. Like really ugly. Like this was really ugly. And then they actually lowered guidance even more than expected. You were down so much that it bounced. You can play the bounce. Maybe it works, maybe it doesn't. It's not the name that I would look for. What I would suggest is that you focus on some other situations. Like for example, when you see like RCL coming out, this is one of the things that I would pay attention to, and we're certainly going to pay attention to in the group tomorrow. And you can see the names here, like Fiserv actually had a pretty good call. You had some buyback going on there. And you can see this after hours just sitting right there, which means you're probably going to have a good day. The one out of all of them that I am most interested in is not, Ford blowing up or anything like that. The one I'm the most interested in is not AMKR blowing up at the end of the day. The amount of squeeziness that can happen here, and is that a term, squeeziness? If it's not, it is now, and we'll probably put it on a t-shirt. But what we want to focus on here, watch, we'll take a look at, they were short, killing it, like just slaughtering it. And then they had this quarter, and they probably tell themselves, they're not going to turn it around. And then you come in here, and now the estimate's 37 cents, and you make 60 cents. So are your cost-cutting measures finally working? And then when you see all these losses, this is really important. See all these losses over, and you see the standardized over, losses, right? Standardized. You didn't have a positive quarter till February 23rd. That was your last positive quarter. Okay? And then you come here, and now you were estimated to have a positive quarter, and now you've had it, and it's double. Well, not double, 50%. This can go higher. It's going to be really interesting to see how this responds tomorrow. I would pay close attention to that. But let me show you another thing that I would pay attention to. So you have Tuesday PM, and we know it's Google, right? AMD, which I think, if they can just show that they sold a semiconductor chip, and I'm being facetious, But that bar is really low, guys, like really low. First Solar is going to be a disaster, I think, but you never know. Maybe they'll get, maybe they'll get lucky. I do think that you want to watch some of these teams. Visa's got to explain themselves a little bit. Snap up 20%, down 20%. It all depends. Really just depends. And again, it's so crazy because that tends to move Meta for whatever godforsaken reason it does. And I never understood it why, but it does move Meta. Google should be really interesting, but AMD tomorrow night's fascinating to me. Now we get into Tuesday morning and you have PayPal in the morning. You have McDonald's that's going to explain why, and how they're going to fix their E. coli issue. And I just want to go through this. If you see RCL flying, your move to me is to go and take a look at the next one that's coming out with earnings, which is going to be this NCLH, and they come out on. I'll just give you a quick tip. That's where my head's going to go. What's the next one? Because they move in tandem. If people are doing the cruise thing, they're not just doing the cruise. They all go to the same place. I mean, they come out of different places, but they're all going to the same place. I'm based in Miami. We see them all. They come right through the port. So if you take a look at these names, what else would you see here? Crocs. Who wears Crocs? I don't know. But last quarter was an absolute dumpster fire, and then you bounced off of that. So I don't have real high hopes here, but you never know what you're going to get there. The important thing here to look at tomorrow is going to be McDonald's, RCL, and how that's going to affect CCL and the others. I know a lot of people play Sophie. To me, Sophie has always been the easiest trade in the world. Just understand no matter what happens, they're going to sell the stock. It doesn't matter. There's so many shares outstanding. All you do is just wait the day, and then you wait the next day, and then the selling just ensues. There's so many shares outstanding that it just can't get out of its own way. And it really doesn't matter. They just want to sell, and they just wait until they can come out and they are cleared after earnings. And then, of course, we're going to come into Tuesday night, and then you have Wednesday morning, and we'll start covering that as well. But the big dogs tomorrow night, in my opinion, that are going to set the stage for semiconductors is AMD. And I think it could be a surprise. That's it.